Welcome to another exciting episode of The Trading Bell. This week on the show, we shall be speaking to Geoffrey Odundo, who is the Chief Executive Officer of the Nairobi Securities Exchange. He'll be talking to us about what the year portends and how has trading been since January up to now, even as we close the month of February. Well, just before we get into the interview, let's take a look at his profile.
Geoffrey Otieno Odundo is the Chief Executive of the Nairobi Securities Exchange PLC. Mr. Odundo, an accomplished investment banker, has been in the financial services sector for the last 26 years, 20 of which have been in the capital markets in various senior roles in asset management, corporate finance and securities trading. He is currently a director of the Central Depository and Settlement Corporation Limited, director of the NSE Clear Limited, and a trustee of the NSE Fidelity Funds. He is a member of the Central Bank and Consolidative Forum for Domestic Debt Market and a council member of the Institute of Certified Investment Financial Analysts. Mr. Odundo is also a director of the Association of the Stock Exchanges of Africa and is a member of the Thomson Reuters Africa Customer Advisory Network. He holds a master's degree in strategic management and an undergraduate degree in mathematics and economics. He is also an advanced management program graduate from Strathmore Business School.
Thank you so much, Jeff.
Pleasure, Abby.
A pleasure to have you on the show as always, and it's been a very interesting year. We've seen a number of key policy shifts from the government, from the rate cap being repealed to right now we are seeing a lot of issues happening when it comes to the markets. But from where you sit, how is 2020 so far building up, especially coming out of a difficult 2019?
Thank you, Abby. So I must say that we've had a fair start to 2020. As you may recall, 2019 was quite a challenging year despite our optimistic view of it. And so turning into 2020, we sort of saw an uplift riding on the recovery of the banking stocks in the last quarter of 2019.
Sure.
The repeal of the interest rate caps had a positive impact on the financial stocks, as you may expect, and that sort of trend has continued. We've also had fairly stable trading on our key leading counters in the telecom sector, for instance. The flow from foreign investors has still averaged at about 60 to 70%. There's been some level of local institutional participation as a few fund managers take profits. And there's a general market stability. Even if you look at the performance of the index, we haven't lost too much ground. It's more or less just the early start of the year. So sure. I must say that it's been a fair start. We do look forward to seeing more activity, especially in this first quarter. As you know, it's a reporting quarter for most institutions, especially banks.
Yeah.
So between now and end of March, I could like to say there'll be a little more volume coming through the market. And so as anyone would expect, I'm fairly optimistic that we'll have a fairly good close for the first quarter of the year.
All right, some good sentiments as you've put it. So Jeff, looking at how the market activity has been building up, from your observations, how is the local investor participation compared to the foreign investors? Yeah.
So first of all, is to say that we are an international market. If you looked at there was a recent report about the performance of African markets, and we merged tops.
Yeah, I saw that.
Despite a challenging 2019. And so foreign investor participation still remains our key investment pool coming to the exchange. However, we are very aggressively looking to really get more activity from the retail and the local institutional clients, because for a market to function well, there has to be a diverse pool of investors, so that if there's an issue affecting the international flow, then the local flow complements or covers that position. And what's been challenging for us has been a weak domestic demand side, especially the retail. So we've put in place a number of programs to support retail activity, for instance. We're currently working on a platform that will encourage or will aggregate retail investors to come through the NSE app, upon which they will be able to see all other apps. And so that using that link, they'll be able to access whichever broker they want to trade with. We are doing one-on-one roadshows to talk to investment managers, to talk to trustees of pension schemes, to talk life insurance companies, to just encourage them to look at the market a bit more positively and look at it from the valuations that are there. Currently, we are trading below a price to earning multiple of 10 and makes our market extremely attractive if you look at other markets. We're also looking at converting some of our increasing our listing program, making it a bit more active. We currently have 24 companies on Ibuka, and we want to get those converted into fairly good listings. A lot to do with also large corporate listings, and even talking to the government on a state enterprise listing to come to the market. So what's really going to activate the market is getting the strong domestic demand back to life, because the international demand is doing its part. But the exit or the activity on the domestic side is quite a challenge, and we really have to work hard on that. All
right. And speaking about the listings, Jeff, what has been your experience when it comes to talking with the state-owned organizations? We've seen the National Treasury showing a lot of interest in that line, and perhaps some say they are dragging their feet. Are we ready to, of course, bring in some of these state companies to the market?
So in 2020, we've sat down together with the regulator, the Capital Markets Authority, and really tried to see what do we need to do together to make this or to encourage listings into the market. I must appreciate the new initiative and strong intervention from the Capital Markets Authority to really work closely with industry and ourselves to see how to activate the listing program. Now, we have to have a value proposition, especially to the national government, that the markets do provide an avenue for capital raising. So in that proposition, we must show that there is ability to raise adequate capital to finance government programs, at the same time to allow government to continue having influence on the organizations that they intend to list. And that's really the case we're trying to make. I think we've met the National Treasury, and also the Capital Markets Authority has met the National Treasury, and we are really working very well as partners to really show government that there's an opportunity for capital raising on the market. And there is demand for good state corporations that come to the market. So there's a lot of engagement that's taking place at multiple levels. On the corporate side, we are talking to all the large corporates, medium corporates, and even SMEs to look at the market as a capital raising platform. As you grow your balance sheet, as you grow your business, you need a funding mix. You can't rely on debt alone. You need a bit of equity. It's not just about capital raising alone. It's about building your brand. It's about strengthening your corporate governance. And there are other auxiliary benefits that are really being looked at positively by customers and other stakeholders. So it's about engagement and really building a case that other than debt, there's actually even debt in the capital markets. So explore. And so that's the case we're making to the large corporates and medium-sized corporates. To the SMEs and companies that want to come to the market for the very first time without really getting a lot of interrogation as such, there's Ibuka, which is an incubation platform. And so this is where we are seeing massive interest. To date, 24 companies and possibly another 8 are looking at coming to on a hosted basis. And so that's an area that we are working on. So I must say, this year, we're really looking at getting the market very, very active and getting companies to come through. Hopefully we'll get more rights issues, more sell downs as companies look at the market to raise additional capital to fund operations. So it's a very aggressive program. We have committees, we have working teams between the NSC, the CDSC, and the NSC and the CMA at the moment. And we'll co-opt other partners into the whole framework so that we can make the listing program a success this year.
All right. Looking at the listings we have so far, we are looking at about 65 companies. On Ibuka, 28 plus the others that you've mentioned, it comes to about 36. Is there a specific target perhaps for this year from your end?
Yes, we have a target. We have KPIs given to me and given to my team as well. We want to be a bit, without putting numbers to any, to putting the numbers, because we also don't want to really, these are very confidential matters that have to be addressed. I must say we are determined to get a big listing, a main listing this year, and a couple of gem listings as well.
Okay.
So we are looking really, really aggressively on that. So I must say that it's been a long drought, certainly a long drought on getting a primary listing, but this year we should do it.
All right.
Right.
Let's shift gears a bit now. For the markets to function effectively, of course, we are not an isolated market. We are interlinked with other markets within the region, as well as outside our borders. And right now, there's a lot of global dynamics happening that could, in one or the other, impact the domestic market back home. For instance, we know of the deadly coronavirus that has really hit hard China, and it has affected a number of stocks in those markets. When you look at the threats for 2020, over and above what we are seeing in China and of course the global trade wars, how are all this likely to impact on investors back home?
So when you're an international market like ourselves, especially being a leading market in the frontier, the frontier market space, you're very vulnerable to the global events and what's happening globally. You're quite right. The issues around what's happening right now, the coronavirus, and a number of other issues like the trade issues happening globally, those do have a direct effect on us, because what happens is that the international fund managers, when there's a lot of uncertainty or risk in the markets, they do sort of what we call flight to safety. So they'll find themselves into government bonds in the developed markets. And that then sucks liquidity for us in the frontier markets. So that presents a challenge. However, within the profile of the international market, international investors, we do have frontier market investors who take a view that despite what happens, there has to be a certain allocation of monies that go to the frontier markets. So they do ensure that flow comes through. So our challenge is how to expand that pool, all right? If they're currently 50, how do we get that to 100? How many new funds can be created that can tap into the frontier market? So to achieve that, we have to ensure that we improve our ranking in the frontier market index. Both companies that are in that index and also the NSE as a market, the MSCI index. That's a very key benchmark that is actually assessed when you're looking at investing in markets. So we're working towards doing that, and we're working with the Capital Markets Authority to achieve certain milestones that we have set out under the master plan. For example, in the master plan, we had given ourselves a commitment to set up a derivatives market. We now have one in place. Correct. We had given our commitments to expand the product offering. We now have a total of 6 categories with 12 different products. Liquidity, upgrading the infrastructure. So we're ticking the boxes to improve our standing on the index. And that way, we will then be able to attract more frontier market funds, which will then mitigate the impact of a reliance on a few, because now you'll have a larger pool. So that is one area that we're really focusing on. There's a lot that we're trying to do locally. I think in terms of policy, there's a lot of policy submissions that we've made as an industry to just make the market more attractive. We really must thank the Capital Markets Authority and the government for giving us quite a lot, especially on the tax incentive programs, which is helping and makes our market really stand out compared to others in the region. And now it's how to convince issuers and investors to take advantage of these benefits. Like, for instance, if you list on the GEMS market as a company, you automatically get a 2-year waiver on interest and penalties on any arrears of tax that you have. Now that's a huge benefit that I think people need to understand, that it exists. Anybody with that kind of exposure can now take advantage of that opportunity in the market. Trading on the market is tax-free, which is good, and all these kind of things. So we must thank government has done their part. A lot more asks are in place because markets continuously want to ask for more, and we hope that we can get those in place. As the NSE as well, because we know that 80% of our trading income comes from trading, we must also cushion that. And how are we doing that? We are doing now more sales on our data business, trying to really increase that on training, okay, and market education.
Sure.
And looking for more partners and doing a lot of strategic programs with stakeholders in the industry. So as opposed to doing everything in-house, for instance, like training, we're partnering with universities. And I think this is how we'll be able to insulate our market from any risks that take place globally and make our markets continuously strong.
All right.
Right.
And Geoffrey, it was an eventful occasion when we saw the green bond being listed in London Stock Exchange.
Yeah.
And of course, this marked a major milestone, not only for Kenya, but for Africa. And of course, NSE being at the forefront there when it comes to having a robust market.
Yeah.
From where you sit, how does this play out, especially right now when we're seeing a lot of global attention towards climate change and markets generating products that investors can tap into when it comes to green financing?
Okay. So I must say that, first of all, is to really appreciate everybody who worked on this particular program. It's been a big program, and our Kenya Green Bonds program was patronized by the governor of the central bank and has a multiple number of stakeholders in that program to really bring the first private sector listing on the London Stock Exchange from Sub-Saharan Africa. That was a big win for us. It also speaks volumes about what potential we stand as a country to make a positive change to the global climate issues. So we are basically walking the talk, if I may use that term. And what it does, it has now shown that the NSE and the capital markets in general are able to provide you with an avenue for you as an organization to also play your part in addressing some of the challenges we face as a globe, especially around climate change. And we have come up, that was a good demonstration case for us, because what it has shown is that you can tap into this sustainable sort of funding that is now becoming a very, very big thing globally to really continuously build and tap on the opportunities that we have locally to support sustainable goals. We are members of the UN Sustainable Stock Exchange Initiatives, and this was a tangible case for us. So for instance, what Econ did with that housing bond has now opened up the avenue for other potential issuers to look at the markets as really a way of tapping funding. It was a successful case in our view because it was coming off the back of a lot of challenges we were facing on corporate bonds.
Sure. So
then for them to have successfully listed and raised close to almost 85% of what they were looking for has now sort of given back some new impetus to investors to look at the corporate bond market again, but looking at different products.
All right.
So I must say it's a pride moment for us. We're very happy with what happened, and we look forward to more and more green bonds coming to the market. Even other structures like REITs can be done as green. So you're able to create many different products around the green framework, and it's been a very big thing for us.
All right.
Yeah.
And Geoffrey, as we wrap up, of course, the current political situation in the country is very dicey when you look at the political undertones around the Building Bridges initiative. And to some extent, this also has an effect on the economy. For the youth out there who are, of course, trying to look out and scout for investment opportunities, and to the wider public, how is the NSE aligning itself towards providing products that they can be able to say they are pocket friendly to this demographic in society, which are really saying, I have my 10,000 shillings, I have my 5,000 shillings. How do I plug into this great market that we have as a region?
Yes, one of the most important strategies we have is how to attract the youth into the market. With our close to 70% youthful population, that's really a good thing for the market, because it really speaks or rather provides confidence about having what we're doing today will be really, is very futuristic. How do we intend to bring in the youth into the market? The first thing, you must really resonate with what's trending with the youth. So the youth are currently very savvy on technology.
Yeah.
We cannot do our old traditional trading process, for instance, of going to broking houses, filling forms, etc.
Yeah.
We have to provide that trading front end on their phones.
Yeah.
And that's why we are really encouraging our trading members to all provide mobile USSD apps to actually provide avenue for the youth to trade. So they need that access at a very comfortable level. They need information. So financial information, what's happening in the market, the trends, announcements, all this should find their way on some of the front end. And that's part of the opportunity we're doing. The youth also want momentum.
Sure.
So they want trading quick.
Yeah.
They want to make money
on the go.
On the go.
Yeah.
So in our new trading infrastructure, we have ability to do day trading, where I can take a position in the morning, midday, sell, probably buy again, and then do that end of close. Now we are just finalizing on finishing or rather closing a few issues around the trading front end and the back office, so that should happen seamlessly. And very soon, day trading will be a reality. That momentum they desire. They also that's why we also set up a derivatives market that enables you change your positions on a real-time basis, on a daily basis.
Sure.
So you don't have to wait for 3 days to get settlement to buy stock again. You're able to change positions day in, day out. So that momentum is very, very critical, and it's something that we are really trying to see how we can encourage youth. Financial education, very important, and that's why we're doing partnerships with the universities, because they have the clients, they have the infrastructure, we have the content. How do we merge those two? So that's another area that we're going to be working on, just to ensure we really strengthen this investment pool to come to the market.
All right.
So I must say that we're not oblivious of the political undertones. I think that's a reality, and we need to ride with that. We're fairly confident that Kenya is a very interesting country when it comes to political discourse.
Yeah.
So for now, we keep out. We wait for everybody to finish their conversations.
Okay.
But we are focused on continuously developing the market, building the client profiles, bringing the youth segment into the market. And you'll see a lot of programs coming together, working with media stations like yourselves. How do we deliver content to this important segment? So I must say, mine is just to say that the markets are really attractive for anybody, especially the youth. And it's really an opportunity to buy.
All right.
Yeah.
Thank you for your time, sir.
Thank you. Thank you, Abby.
Much appreciated.
Pleasure.
Well, we've heard it from the captain that is steering this great ship here at the Nairobi Securities Exchange. That is Geoffrey Odundo, shooting from the hip. He's quite optimistic that 2020 portends a lot of great prospects, especially for the youth and, of course, for the retail investors at the exchange. Well, that has been a conversation with the CEO of the NSE. For now, I want to take a quick look at how the markets performed this week. Well, that was our conversation with the CEO of the Nairobi Securities Exchange, Geoffrey Odundo, and it brings us to the end of the program this day. Thank you for your valid feedback, and we definitely look forward to bringing you more exciting interviews in this year. For now, it is bye-bye. Have yourselves a lovely evening.